Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Joe Tigay, portfolio manager with Equity Armor Investments. Joe, it's great to have you back on the show. Welcome to Trade Talks.
Thank you for having me.
And Joe, I think really what the question is right now, we have this confluence, a perfect storm of rates. We're taking a look at the yield curve, inflation, and it seems as if the market is really taking this more in stride than I think some investors or traders had expected.
Well, yeah, if you just look at the last 9 trading days specifically, you got the Nasdaq bouncing all the way from 13,000 now all the way up to 14,600. So that's a very dramatic rally in just a very short period of time. So a significant bounce. And for me, it's really just been the back end of that curve coming lower. That's been really good for a lot of these growth companies. They're able to refinance and continue their borrowing practices at lower rates. The flip side of it is, though, the reason the back end of the curve is lower is because a lot of economists out there are forecasting a recession coming forward, and there's going to be a need to lower rates after they raise them. So I'm not so sure what is the right course of action. Who do we believe?
Right, and I think that's really what the challenge is, because inflation is just all that you hear about. We see it at the pump. We see it starting to impact people's commutes, whether it's gas prices, commuting prices, food prices, right? So when does it start to impact the consumer? We know the consumer is 70% of GDP. We know the economic impact that can have if that should slow down. At some point, you can only spend so much on goods and services. When do you have to start to think about demand destruction here?
Well, it hasn't materialized just yet, and that's kind of been puzzling for a lot of economists, watching just continually the economy continue to grow. Now, there was an excess of cash throughout the COVID situation. A lot of money just poured into the system. At some point, that has to bleed out, and we might be starting to see a little taste of that. We had actually a weak housing number this month, so we have rates rising, we have all the other costs rising for people looking to buy houses. That's obviously impacting that situation. And of course, that just has to eventually work its way through the system. At some point, there's less and less money to spend. Consumers have to make more choices with the money they do spend, and eventually that does slow the economy down.
And Joe, anything that you're seeing in the Nasdaq-100 volatility indexes or any of the other volatility complex that could provide some potential clues, or do we expect more choppiness here? Or, I think everyone's asking themselves, is this a continuation of the bull market? Is it a bear rally? Anything in the volatility market that we can discern from?
Yeah, well, I mentioned there was a huge rally last 8 days, 9 days in the Nasdaq, and there was a big flush out for volatility in that situation too. Had the VOLQ above 36 going all the way down to below 25 in that trading span. So that's a very significant drop in volatility. And sometimes that's a good sign of investors getting ahead of it. However, in these bear market rallies, which I'm not saying this is necessarily that, but if it is, when we see these flush outs in vol and the market does turn south again, we see a very sharp reverse back into volatility if there is another leg lower in the market.
All right, Joe, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.